If you value real analysis over surface level hype, go ahead and like this video, subscribe to the channel, and turn on notifications because what we're covering today is bigger than one headline and it's moving faster than most people realize. Now pay close attention because something just shifted, and whether people want to admit it or not, Donald Trump just changed the strategic environment XRP exists in. This is not about endorsements. This is not about politics. This is about power dynamics, financial leverage, and how global money behaves when uncertainty spikes. Here's the hook. Markets don't wait for laws to pass. They move on expectation. They move on probability. They move on fear and opportunity. And right now, the probability of structural disruption just went up. When Trump re-enters the global narrative, institutions don't argue online. They run scenarios. They stress test assumptions. They ask one core question: what breaks if the current system gets challenged? And the very first thing they analyze is settlement, because settlement is the plumbing of global finance. And when plumbing fails, everything floods. Let's slow this down. The modern financial system depends on legacy rails that assume cooperation. Cooperation between banks, between governments, between regulators, between currencies. But Trump's entire posture is built around renegotiation, pressure, and leverage. That alone introduces friction, and friction exposes inefficiency. That's where XRP becomes relevant, not as a trade, not as a meme, but as infrastructure. XRP was designed for moments when money must move regardless of politics, fast, cheap, neutral. That's not ideology, that's function. Now, here's what most people miss. Trump doesn't need to talk about crypto at all. He doesn't need to mention blockchain. He doesn't need to say the word XRP. All he has to do is challenge the status quo, because the moment he does, institutions start looking for exit ramps and backup systems. Optionality becomes valuable, and XRP represents optionality in global settlement. Think about this. If trade relationships strain, cross-border payments become political tools, delays increase, costs rise, liquidity gets trapped. In that environment, the system that survives is the one that bypasses bottlenecks. That's not speculation, that's history. Now, layer in timing. We are entering an election cycle mixed with massive debt, currency pressure, and geopolitical tension. That combination forces capital to pre-position. Big money doesn't wait for confirmation. It moves early and quietly. Retail waits for news. Institutions move on signals, and the signal right now is uncertainty with teeth. Trump's rhetoric amplifies that uncertainty, not chaos, controlled disruption. And controlled disruption benefits tools that reduce friction. XRP is one of the few assets that does exactly that. Now, let me be clear. This is speculative analysis, not a promise. There is no official partnership, no announcement, no secret deal. But markets don't need permission. They move where logic leads, and the logic says this: if the world becomes more fragmented, bridges become more valuable. XRP doesn't compete with currencies, it connects them. That matters when alliances strain. It matters when sanctions increase. It matters when speed becomes a strategic advantage. And this is why XRP holders need to pay attention right now, not emotionally, but structurally, because the narrative is shifting, and narratives always move before price. Most people will dismiss this until a headline confirms it. By then, the positioning phase is over. That's why this channel exists, to talk about what's forming, not what's finished. Stay with me, because in the next block, we're going even deeper into what this shift could mean long-term, and why the window most people think they have may be much smaller than they realize. If you're still thinking XRP's future depends on one court case, one ETF, or one announcement, you're missing the larger picture. XRP's real value proposition only activates under pressure, and pressure is building. Trump's approach to global finance isn't subtle. He challenges central banks. He questions global trade norms. He uses economic pressure as a negotiating weapon. That behavior forces countries and institutions to hedge. Not publicly, quietly. They don't announce backups, they build them. Now think about the current system. Most cross-border payments still rely on slow, multi-layered correspondent banking. That system works when everyone cooperates, but cooperation is fragile. The moment trust erodes, inefficiency becomes risk, and risk demands alternatives. This is where XRP sits, not as a rebellion against the system, but as a release valve for it. A neutral settlement layer doesn't threaten currencies, it protects liquidity. That distinction matters. Now, here's the uncomfortable truth: governments don't innovate under comfort, they innovate under pressure. And Trump increases pressure. Whether intentionally or not, he accelerates timelines. He forces decisions earlier than expected. And when timelines compress, ready made solutions win. XRP is already live, already scalable, already tested. That gives it an edge most speculative assets don't have. Now, zoom out. The global financial world is slowly moving from a single dominant system toward a multipolar structure. Multiple currencies, multiple alliances, multiple rails. That doesn't destroy the dollars, it complicates settlement, and complexity increases demand for bridges. This is the environment XRP was built for: not hype cycles, not retail pumps, structural complexity. Now, here's where XRP holders need discipline. This isn't about short term price explosions, this is about strategic positioning. Markets often move sideways before they move violently. Silence doesn't mean nothing is happening, it often means positioning is underway. And this is exactly when people get shaken out. They lose patience, they chase noise, they ignore structure. That's why awareness is everything right now. And this is a good moment to remind you: if you're finding value here, make sure you're subscribed. Because when narratives flip, information becomes expensive. Now let's address the skepticism, because it's fair. Some will say, "We've heard this before." Others will say, "Nothing ever changes." But here's the difference: the macro environment is tighter than ever, debt is higher, trust is thinner, speed matters more, the margin for error is shrinking, and systems that reduce error gain relevance fast. XRP doesn't need universal adoption, it needs critical corridors. Even limited use can dramatically change demand dynamics, and institutions understand this. They don't need permission to prepare, they only need justification. Uncertainty provides that justification. Trump amplifies uncertainty. That's the catalyst, again, not guaranteed, not promised, but logical. And logic is what serious money follows. So here's the takeaway: this moment isn't about cheering or fearing one man, it's about recognizing how power shifts affect infrastructure. And XRP is infrastructure. If global finance enters a more fragmented, contested phase, the assets that survive are the ones that connect rather than compete. That's XRP's lane. The question isn't, will this happen tomorrow? The question is, are you positioned if it does? Because by the time certainty arrives, opportunity is gone. Stay rational, stay informed, and stay ahead of the curve. This story isn't finished, it's just entering its next phase. And when the next signal appears, you'll hear about it here first.